Straight to commodities, because I'm pleased to say Peter McGuire, CEO of XM.com.au, joins us now live from our Sydney CBD studio. Does it continue, iron ore, do you think, pushing higher into the new year, Peter?
Well, good afternoon, James. Yes, I think so. A couple of reasons why. I think that overall infrastructure boom that we're going to experience in 2017, we know that China's trying to slow things down as far as, yuan depreciation and so on and their housing boom. But I think it's going to be a counterplay with the Trump administration and what that's going to do. So I think that you're going to see an uptick from here. And possibly 17 is going to be a fairly good year for miners.
So does it continue through the year? Because, I mean, so much, I assume, is reliant on China. And, whenever China's involved, there's not always an awful lot of clarity.
Well, that's exactly right. I think that they've got their own internal problems, and naturally they've got capital outflows, James, running at about $200 billion for the fourth quarter, and we're going to see an increase, we believe, in the 17 first quarter. So that's going to create some concern. As we know, we understand where Yellen's positioned, and we'll probably see a couple of rate rises in 17. They're shooting the stars out there. It's certainly been a wonderful turnaround over the Obama administration for the last 7 years, and that we think will continue under Trump-elect.
How do you think the huge transition in China is being managed at the moment? It's a balancing act, to say the least.
Well, exactly. You've got speculation, naturally, to the housing market and apartments, and that seems to be a national sport to some extent. So the government's mindful of that. They want to contain that side of the market. But it is a balancing act, and as you've got those capital outflows, you've also got yuan depreciation, you've also got where the US dollar plays. So there are so many different components and the undercurrent is where you see value. So in turn, the government really has to be a front and centre approach. Next year, James, we're saying it'll be around about that 6.5% growth, maybe a fraction more. It'll be the slowest point since 1990.
How does the new president-elect, how does Donald Trump play into it, particularly his barbs, if you like, that he's thrown towards China, particularly in regards to calling them a currency manipulator? Does that impact China? Does that get a reaction from China?
I think it certainly does. And also we've got to keep an eye on Peter Navarro, Professor.
Yeah.
He really is the wild card that's been thrown in the mix here. We really do feel that he'll have a large input. We understand Trump's, I suppose, style, and that's going to become very evident over the first couple of months. I think sitting back here, James, we're in Australia are a little bit isolated, but when you travel to the world and you see Europe and how they're situated, and certainly the Middle East, and their interpretation as far as the Trump administration and Asia, of course, they look at things far differently, and I think they have a little bit of a wow factor. That this guy is a hands-on operator. He's not going to take a backward step. And if he lives true to his word, we're really going to see a very interesting 12 to 18 months, all the way across from infrastructure to energy. It's going to be a very stimulating and entertaining sight to see.
Look, are you pretty bullish when it comes to broader global growth next year? So many forces at play, and really politics jostling with central banks to be dominant players, it looks like, in 2017, because they really were in 2016.
Well, exactly. If you just put your mind to, let's look at Saudi and just a huge monster in the energy field. They're down $79 billion for 2016 as far as a deficit, and there's talk that we're going to see the IPO and what happens with Aramco. We're not really sure whether that'll happen for a couple of reasons we'll go into a little later. But then you look at Russia. They've been hemorrhaged. You look at the Eurozone, and they're really in a quagmire of misery. Germany, we understand where Austria was with the recent election. We've got elections running across the Eurozone over the next 12 to 18 months. Understanding where South America is and Brazil, they've certainly taken their hand off the wheel, and that's a turnaround process after their president and what happened there. And so we've got a lot of fractured states, James, and we've got, somewhere like India, which is a growth engine, large population base, and they're really, hitting the ball out of the park. So it's quite an interesting context, the Asian third, the Vietnams and so on, and there are so many different players, all with different expectation and growth strategies.
Let's talk energy. So interesting. And you made mention of Saudi Arabia's planned IPO of essentially their energy business. How important is it going to be for them to somehow manufacture a higher oil price to then getting that IPO away?
OK, well, first off, James, you think a couple of things. First, the company Aramco, they say it's valued at around $2 trillion, just for your viewers, with a T. So we take on board, they're looking at floating possibly a 5% or $100 billion. That's certainly going to be a big cash injection to an economy that's needs a bit of a wake-up call at the moment, and they're slashing government spending. But more importantly, they haven't released updated reserves as far as their oil for many decades. Some people say it's back to 76. So if you're saying that we've got X amount of oil in the ground, the only true way that you would know, James, because it hasn't been disclosed to the market, would be to take that IPO to market. So in turn, under due diligence and naturally a prospectus, the IPO, you'd have to state how much oil you've naturally got. So that is the unknown, that whether Saudis want to go down that pathway and actually say to the world, James, how much oil we actually have.
And how precarious a situation is Saudi Arabia in at the moment? You made mention of the huge fall in terms of their national accounts. I mean, this is putting on a bit of social pressure as well, isn't it, because of this plunge, this oil price? Yes, it's come back, but it's done some damage. Well,
it has, absolutely. You know, it's just been from a social standpoint, you've got so many of the Saudi nationals, the unemployment's rife. You've got one thing about it which is fascinating is the age demographic. You're looking at a large proportion of their population. I think greater than 50% is under 30, 32 years of age. Wow. So as that transition moves forward and you're seeing that younger generation, and firstly, they have trouble getting jobs. Secondly, a lot go to US and, of course, Australian universities in Asia and bring on board or bring home that new knowledge and technologies, and they want to naturally use that job, and they want to get a job, and they want to use that knowledge. So this is a great concern to the Saudi nationals. What happens? We can't get a job, unemployment's high, and all of those social issues, James, that play across the context of the nation.
And how's it looking, do you think, next year then in terms of the all-important oil price for them? And what do you see as the main factors in play for it in 2017?
Well, let's see, if the oil price does go up and you see Brent and WTI edge higher to that $60, $65, then that's going to cause a rebound or a returnaround as far as the US shale. That's going to really, and this is where it's just so fascinating, an action by OPEC and non-OPEC could favourably enhance the US shale. And I'll explain why. We were looking at $60 a barrel for the US shale a couple of years ago as far as value and what it actually cost to extract a barrel. Now they've cut costs to the mid-40s, and in turn, as the price goes up, so do these shale producers. We're saying now in the US that you could see, James, 40 floats or IPOs over the next 18 months to 2 years for the energy sector in that $2 to $4 billion band. A lot of them carry little debt and outside that Permian Basin. So I think it's going to be an uplift, and it's going to be a very fascinating game as far as US and Navarro, Trump versus the Saudis, OPEC, and of course Mr. Putin.
Yeah, wow, there is a lot to be watching next year. Peter McGuire, as always, great to get your thoughts. Thanks very much.
Thank you, James.
Peter McGuire, there, CEO XM.com.au.